The pound versus U.S. dollar moved sharply higher after the unexpected early release in error of the UK budget that sent the pound initially to the upside and then was crashing to the downside. Well, not really crashing. It came down to a key technical level for the euro versus U.S. dollar, seeing up and down price action in the bank, and in the Japan dollar versus yen. We're also seeing some rotation to the upside and downside. Now back up to the upside, and what has been more volatile trading. I'll talk about the technicals that are driving each of these currency pairs in this video. So let's get started. Well, let's start like we always do, taking a look at the euro versus U.S. dollar, and it initially moved higher in the Asian Pacific session after trying to fall back below the 200-hour moving average late in the U.S. session, and then then bouncing back into the close and moving back to test that 200-hour moving average, where initial buyers came in and found support. You can see it more closely without the arrow there, but you see how the buyers leaned against that level and pushed to the upside. The move to the upside took the price up toward the this swing area, and more importantly toward the 50% midpoint at 1.15976. The high price up for the day came in at 1.1595, just 2.5 pips or so short of that key 50% level. We also that level also happened to correspond with this high right here, although it wasn't the 50% at the time. Yes, it was, of this move to the downside. So there are the last two tests of the 50% found willing sellers against that level, keeping the buyers more to the downside. Of course, all the stuff in the UK helped to push the euro versus US dollar down in sympathy, and we move back down toward the 38.2% retracement. Our 200-hour moving average is moving lower through here, making it a harder target to reach. But so far, the 38.2% retracement has done a pretty good job of holding support, similar to what we found here with the price moving down to that level and finding support buyers. So support here against the 200-hour moving average, a resistance that we know, a stronger resistance up there at the 50% retracement level. Let's take a look at the dollar versus yen next. More talk that the from Reuters today that the Bank of Japan was looking to hike rates to help to give the yen a boost. But the dollar versus yen did move a little bit lower in the Asian Pacific session, falling below the 200-hour moving average and back below the 38.2% retracement of this move to the upside from the last low right here, November low to the November high. At 38.2% retracement comes in at the 155.94 level out right there, and in trading yesterday we moved below it. We also moved below the 200-hour moving average yesterday, but could not sustain it, and today we did the same thing, breaking below the 200 and the 38.2. We should have headed lower, folks. That's what you do when you break these things, but we couldn't do it. And then so what do we see on the rebound back above the 200-hour moving average, back above the 38.2% retracement? We find buyers against that level, and that helps push the price back to the upside. So much for the Bank of Japan raising rates and to support the yen. The yen is getting weaker. Up at the top, we do have the 100-hour moving average, and if the sellers, if you wanted to sell, that is the level to lean against. We did find willing sellers against that level yesterday in the Asian session, pushing the price, starting the move to the downside. So any sort of move back toward that level should find sellers against the level at 156.72. Be aware of that level and trading here today. On the downside, watching the 200, watching the 38.2% retracement. If the price is going to go lower, we need to get and stay below both those levels. If we can't do that, then the sellers are not winning. Okay, that's just a fact. Finally, let's take a look at the pound versus US dollar. This is the spike to the upside initially. Took the price back about the 38.2% retracement in volatile trading. Then we moved sharply to the downside. Now, although the price moved to the downside, what do? We found support buyers right against the 200-hour moving average ahead of the 100-hour moving average. And this area is going to be now the key support for the pound versus US dollar. We need to break below both the 200 and the 100 in order to shift the bias more to the downside. If I were to put a box around the price action here, I would probably do this type of box that outlines the ups and downs of this currency pair over time. It all started here with this move to the downside, which reached the extreme down here, double bottom, which we never returned to again. Then we moved to the upside, put putting a ceiling against this level right through here, and then back down to this new floor right here with the move back up to the 100, back down to the floor, found support, and now move back to the upside that could test the old high. So we're seeing the ups and downs. We're now in the middle of that range thanks to the budget snafu and all that other stuff that came out with it. And we've now moved into the middle of this red box. Stay above it. It gives the bias, the short-term bias at least a little bit more to the upside. Move below it, and the short-term bias moves back to the downside with this swing area right through here as a target, followed by this yellow area right here, followed by the obvious low through here at the 1.3038. So that's my look at the three major currency pairs to kickstart your trading day. It is a shortened day because of the Thanksgiving Day holiday tomorrow, so we'll be closing a little bit early with aiming coming in at his normal time. So there'll be a little bit gap in the afternoon. So I prepare for Thanksgiving. Thank you all, and speaking of Thanksgiving, my name is Greg Michalowski. Good fortune with your trading. Bye-bye now.